All right, welcome back to Two Stupid Guys Trade Stocks. I'm Vinny,
I'm Dylan.
and the kind of recent decline in Chinese tech stocks, we want to talk about calculating a margin of safety price. Particularly Alibaba is a company I've been looking at.
Yep.
I think Dylan's actually looking at it as well from like a swing trade perspective. But
It did make my list this week. Baidu, PDD, and Alibaba got killed,
yeah,
all
yeah,
for the Chinese scare.
yeah. No, I mean, hey, it's a legitimate concern, but let's figure out if we're getting paid appropriately for that legitimate concern. That's what the margin of safety price is all about, right? So. Those of you not familiar with like what a margin of safety price is, basically, this is kind of the bedrock of that Graham Dodd, Warren Buffett style investing. Basically, you do like a discounted cash flow where you calculate the present value of the future earnings of a company, and then you take a margin of safety off of that because you're predicting 10 years in the future. Like how certain can you be, right? Dylan can't predict what he's going to have for lunch probably quite yet.
Doing a burrito.
Burrito, yeah, nice. So basically, like I said, you do the discounted cash flow method, and then you'll take either a 30 or 50% margin of safety from it. Little circle of confidence. So 50% is the traditional one, but sometimes it's pretty hard to find a company that you're going to calculate that's 50% below what it actually deserves to be priced, right?
Especially in the stock market.
Yeah, especially right now, like 2021, right? This is a 5-year graph of Alibaba's stock price here from Yahoo Finance. If you're not familiar with Alibaba, they're like the Chinese Amazon, basically. So they have operated multiple different aspects, but their bread and butter, the vast majority of the revenue is derived from commercial, like retail, basically. And they've had a nice pullback recently. This is their revenue growth. As you can see, it's beautiful little graph there of the trailing 12-month revenue growth. This kind of spike you're seeing here are fourth quarter, right? End of the year retail sales always tend to do a little bit better, but it's a beautiful graph. Can't ask for too much better than that. This is their profit, so also growing. A little bit more sporadically. There's some kind of a movement based on like some subgroups that they own, because they're have to account for them in the equity methodology, especially this one called Ant Group. But so it's not quite as regular, but still overall great positive trend, right?
Yeah, very impressive.
Yeah, exactly. This is one you don't love to see. They are issuing shares. Not my favorite thing, but it's employee stock comp that you're just not buying back. But it not out of control that they're growing their shares. Okay. So now, if you're not familiar with this gentleman named Phil Town, he's become like a well-known value-oriented investor, and he actually has a course. He has a YouTube channel, a podcast, that sort of stuff. Well, I used his calculator here basically, and I plugged in the last 12 months of Alibaba's earnings, which is the 889. Now, I actually haircut their growth rate. They're actually growing at 48% year over year. So pretty astonishing growth rate. So I was like, I didn't quite feel great about putting that on for future growth rate because it's going to come down over time. So I cut it in half. They're going to grow higher than that for a couple of years.
That's quite a haircut there, my man.
Yeah. Well, I mean, so I was aggressive about that because growing at 48% per year is unsustainable. And then I left their PE in the future at 24, which is a little conservative. Basically, a 24 future PE implies that by year 10, they're only growing at 12% per year. So, I don't know if you're familiar with, generally, PE is thought to, as a rule, you say about double the growth rate, right? So, these are relatively conservative numbers compared to what Alibaba has done of late, okay? Now, I left Phil Town's minimum return percentage at 15, which is a little aggressive. Usually, when I do these sort of calculations, I use 10%, which is approximately what the S&P 500 index funded returns per year. Still, regardless, right? So now this is where the fun part gets down here. So you see the future earnings per share is saying about in 2030 that they'll be earning about $76 per share. And the stock will have a value of about $1,800 per share, like I said, and that's assuming some deceleration in their current growth rate. And you know, that gives you a current value of these discounted cash flow of $4.50 to $3 per share. We haircut that in half, basically, so 50% margin of safety pricing, and we get this $227 per share. Ironically, Dylan, do you happen to know what Alibaba closed at on a per share basis as of this past Friday?
Well, I didn't know. I cheated. It's
Oh,
227.26.
exactly. It's astonishing, right? So, like, basically, the entire Alibaba company is 50% off right now.
Yeah.
Yeah, I mean, that's
Their
a better sale
entire
than I've ever encountered.
their high was 319.60, and that
Yeah,
was October,
exactly.
mid-October.
So, this is
Yeah.
a fantastic deal on a very quickly growing company. It is not to say that it is not without risk, though. Alibaba definitely has some risk associated with the Chinese government right now. That's the reason why it's at this price, is that that there's been some moves against large tech within China. So you know they're pricing in that risk, but at a 50% discount, I think that's it's well worth the chance there. I mean, these are the times when you get those potential for 4 or 5x your money over the next 10 years, and it honestly could even be better than that. If you think about like opportunities where like Chipotle, right, when they had their whole E. coli scare, that's the kind of opportunity
Yeah.
here.
They had like three.
Yeah,
They had like three in a row, and it just kept plummeting. I'm like, man, this is really oversold.
yeah. It is in these kind of opportunities that you really get those long-term, tremendous, compound growing investment opportunities, right? I don't know if Warren Buffett's famous one about Coke when they issued new Coke, right? Or American Express when there was all potential risk of them going bankrupt over some bad insurance that they had issued. Like, these are the kind of headlines that you look at. Even the most recent one, Apple, right? People were saying, iPhone sales, it's market saturated, da, da, da. Like, it's when the headlines say the most negative things about a company
Yep.
that the opportunities financially are sometimes the best. I said Alibaba's growing tremendously. They're actually growing faster than Amazon.
Yeah, no, they're ridiculous. And on top of that, they're 227. They have really strong support at 220, 215. And then they had a low when everything tanked a little bit ago of 211, and they
Yeah.
held it. It went right back up.
Yeah, I mean, I think this is an opportunity to buy a very valuable company for a good price. The other thing that is kind of interesting, that little aspect of playing in this here, is that there's been a lot of talk about inflation and like the U.S. dollar losing value. One of the ways you can insulate yourself from that theoretically is to invest in companies that derive the majority of their income outside of the United States, right?
Right.
China is not a pure play on that, because China typically has pegged their currency to the U.S. dollar. It's given them an advantage in trade, right? Like,
Yeah.
they don't allow their currency to free float naturally. So that's been one of the major talking points about Chinese government interference in trade. But still, if they do allow their currency to float, this gives you an opportunity to insulate yourself a little bit from any devaluation you may see in the American currency, because they earn majority of their income outside the United States.
Right. If not almost all of it.
Yeah, exactly. So I just want to thank you guys for tuning in. This is a little walkthrough of the margin of safety pricing and an opportunity I think is currently available in the market. I'm personally going to be probably investing a little bit of money into Alibaba at this point. But you do so at your own risk and peril.
Actually, for my swing trades, I closed Target last week because I got like 5R. Baba's in my swing trade list this week.
Nice.
It looks very attractive.
Yeah, well, stay tuned for that video. It's coming up very shortly. Thanks.
Have a good one, guys.
Yeah, thanks for tuning in.